Good morning, everyone. On behalf of JCI Triprayar, I warmly welcome you to Skill Sprint 2025, session 33. Skill Sprint has been our year long mission to learn, grow, and empower by bringing valuable knowledge to our member and community every single week. We have covered a diverse topic from business and finance to personal development, and today we continue that momentum. Over the months, we have seen Skill Sprint become more than a series. It's a moment of consistent learning that's impacting lives and careers. Today's session is on a topic that concerns every small business owner is GST for me. The small business guide to getting is right. GST has transformed the way business is done in India, but for small enterprises, navigating and registration thresholds and benefits can be confusing. Our speaker today, CA Jithendar Patel, is not just a character accountant but a true guide for entrepreneurs. He is a founder of JKPP Associates with a decades plus of experience. He has advertised prestigious clients like Boss Corporation, Green Gold Animation, and State Bank of Patiala. He is a recognized expert in taxation and consulting and has delivered impactful GST webinar across forums. Beyond his professional excellence, he is a family man, sports enthusiast, and a lifelong learner. And now, please join me in welcoming CA Jithendar Patel to take our through today's insightful session.
Thank you, Nasrullah, for the kind introduction, and
Thank you, sir.
thank you, CA Sitesh, for inviting me, and JCI Triprayar for having me here. It's a pleasure. It's an honor to be sharing my views on GST with you all, guys. Uh, so next, maybe 30 to 45 minutes is going to be very interesting. I promise you that. But I would also require your participation. So because this is going to be an interactive learning, wherein it's not going to be one way, but I'll be asking you questions and you have to engage with me in the chat bot. So is that okay? Is that okay with you?
Yes, sir. Yes.
Yes, sir, of course.
We are business owners, right? Many of us in this room are business owner. Okay. So why do we need to know about GST? So we need to know GST because as a business owner, we are in charge of all the functions of business, right? We are CEOs of the company. Yeah. We are in charge of sales, marketing, operations, accounts, human resource, and even R&D of the organization. Accounts is also a function of business. So as a business owner, we can't just say that I'll focus on sales, marketing, operations, and let accountant handle the accounts. No, if you don't ask accountant the right question, even he's also he can make mistakes. So you need to, as a business owner, you also need to have a basic knowledge of GST to ask your accountant, ask and also review his work as what is he doing, whether he's filing on time, whether he's filing correctly or not. So that is the reason you need to have basic knowledge of GST. And this session is going to be about the basic knowledge of GST as to when do you need registration, right? What are the forms you need to file? All this stuff you will be learning in another 45 minutes or so. Now, if you remember, Bengaluru was one of our southern states. Karnataka was in news recently, wherein many small traders from Bangalore, they were asked to pay GST about up to 30 lakh rupees. So how did the government, state government got the data is from the UPI transaction. So here is one notice. If you can see, it's very blur, but it is issued to Jairam Pujari. And if you can see, the turnover is only 31 lakh 9,000, but is asked to pay tax of 14.37 lakhs, which is about 45% of the taxable value. So it is very huge. Had he been registered under GST, then he would have ended paying GST of only less than maybe 50, 60,000. and that also he would have collected from the customer. But now this 14.37 lakhs he has to pay from his own pocket. And just imagine how fatal it can be for his business if the department goes through and he loses in appeal. Yeah. So that is so the GST becomes very important. As a business owner, we need to check whether we are paying right GST, whether we need to take GST registration, and when we should take it. There was in another southern state also, Tamil Nadu, one Pani Puri vendor got GST notice, and he was asked to produce books of accounts. The department gone through his UPI transactions and arrived at a turnover of 40 lakh rupees. So imagine the mental pain this Panipuri wala would have gone through, right? So the big question is, so many small business trader should know, do I need really GST for my business? Okay, what happens if I don't register, right? How can GST help me grow instead holding me back? So many of us think that the GST is only compliance. It is not useful for my business. It's just a headache. Let me avoid GST and do all cash transactions. Believe me, that's going to be not good for your business, as you will not be able to scale through it. So these are the few questions which we'll answer in the presentation today, right? So this is the question I'm asking to you again, guys. Please participate through chat bot. From which date was GST implemented in India? It's very simple question.
July 1st, 2017.
Correct. The GST was introduced in the year 2017, 1st July. Yeah, it's almost 8 years. Thank you for answering. So now let's understand the basic. Who needs GST? So first is in the state of, so this for different state, there is a different turnover limit. For the state of Kerala, it is if he's a trader or a manufacturer of goods, then he needs GST registration if his turnover crosses 40 lakh rupees. And if he's a provider of service, then his GST registration is required if the turnover crosses 20 lakh rupees. But in the state of Telangana, let's say in my state, the turnover limit is 20 lakhs for goods and services both. So it varies from state to state, and special category states, it's a little lower. Again, it is 10 lakhs GST registration is required. Then moving further, if you are making interstate supply, like suppose if you are selling goods from Kerala to Karnataka, then also GST registration is required irrespective of your turnover. You will not be able to sell goods in other states if you don't have GST registration, right? Moving on, suppose if you are dealing in services wherein you will have to pay GST on reverse charge. So let us understand reverse charge as a layman. So generally, the GST is to be paid by the supplier of goods or services. But in case of certain goods and services, the GST is to be paid by the receiver of the goods and services. So some services like advocate services, then services received from goods transport agency, the receiver of the services has to pay the GST. In this case, if you are receiving those services, the GST registration becomes mandatory. And moving on, suppose if you want to sell through e-commerce platform like Amazon, Flipkart, then also you need to have GST registration mandatory. Yeah. So these are the some of the requirements where the GST registration is mandatory, but you can also go for voluntary registration. Right. Now, why do we need to take voluntary registration? So suppose you are setting up a factory, and the factory setup is going to take 2 years. Yeah. So and you are in the first year, you are buying the machinery, importing machinery from China or maybe from within India. So you will pay GST, but your business will start after 2 years. So in that case, it makes sense to take GST registration to avail the input tax credit what you are paying on purchase of machinery, right? So voluntary registration option is also available. GST department will not say that your turnover has not yet crossed 40 lakh rupees. You will not give GST registration. So we can also opt for voluntary registration. So I hope I'm clear. When do we need GST registration? So here is question number 2. What is the difference between CGST and SGST? Perfect, Rishi. Yeah, it is central tax and a state tax. So central tax, thank you, Arjun. Yeah. So CGST, the tax goes to the central government, and SGST goes to the state government. So in case of Kerala, the central tax goes to the Union of India, and state tax goes to the Kerala government. Now, the important question, why GST matters to business owner? Okay. So first and foremost thing, as I said you in the example, plant and machinery example, you can also you can claim input tax credit. So suppose you are buying a plant and machinery for a lakh rupees and you are paying 18% GST on it. So actually, if you are having GST registration, then your effective cost is only 1 lakh rupees. But if you don't have GST registration, then the cost becomes 1 lakh plus 18%, which is 1,18,000. So GST helps in reducing cost for the business, and it avoids the cascading effect. Then suppose like that Pani Puri wala and the small traders in Bangalore, they got GST notices, penalties. The penalty becomes 100% if it is fraud and intentional. If you're not taken GST registration intentionally, then it becomes fraud, and government levies equivalent to tax, it levies penalty. So suppose if the tax amount is 1 lakh, then penalty also you will have to pay 1 lakh, which is 2 lakh plus again interest. So with GST registration, you can avoid all these complications. The third thing important is when we are doing business. So many micro, small and medium enterprises, if they have GST registration, and if a person is buying from them, he will think that I'm buying from a good customer, I mean, good supplier, because the GST registration helps in building that credibility. Yeah, vendors also would like to do business with those persons who have GST registrations. Otherwise, they will take you lightly. I mean, they will think you small. See, imagine if you have not taken GST registration, then they will think your turnover is less than 40 lakh rupees. He is a small player. But if you have GST registration, they will not know your turnover, and they will think you big, and they will like to do business with you. Yeah, understand the perception behind the customers and the vendors. Then, as I told you earlier also, that if you want to supply from Kerala to Karnataka, then you cannot do supply the goods if you don't have GST registration. But if you have GST registration, you can provide your goods and services across India, and of course, you can export also, right? As Mr. CA Sitesh also posted in one of the messages, that GST, if you have GST, it's easier to get loans from bank. Nowadays, banks also are not giving loans if you don't have GST registration. So what are the risks of ignoring the GSTs? Let's understand that. So foremost thing is you lose input tax credit. Yeah. So suppose if you are liable to get the GST registration, and if you don't take the registration, if the department comes and finds out tomorrow, then whatever input tax credit, GST, what you have paid on purchases, you will not be eligible on that. And the department will ask to pay GST on your output. Yeah. So you risk losing input tax credit already paid on purchases. Then of course, penalties and notices from GST department. Then as I told you earlier, that business partners may not like to work with you because they may think you as a small person, small business owner. Then limits growth opportunities. Like some contracts and tenders mandatorily requires you to get GST registration. If you don't have GST registration, then you cannot participate in those tenders and some B2B contracts as well. So how do we get GST right as a small business owner? Yeah, first we need to take GST registration, which is PAN and Aadhaar based, and it's online. Yeah, And we need to have correct invoicing with HSN codes, with GST number of our GST number entered. Yeah, and if suppose our customer is also having GST number, then we also need to enter those numbers. So we need to have proper invoicing and also proper documents while making the movements of the goods, like way bills and all delivery challenge and so on. Then once you have taken GST registration, you have given invoices, generated e-way bills, then you'll have to file the monthly returns, monthly or quarterly, depending upon the schemes. So you have two options. One is filing monthly and quarterly. Then you also need to maintain certain records, like whom did you supply goods, right? From whom did you purchase? Then bills, vouchers, all those things you need to prepare, have a proper file and store it. Also, this will help when some inquiry comes from the department, any show cause notice issues. So these documents, these ledgers, purchase ledger, sales ledger will help in performing the audits or answering any query from the department on a smooth manner. Otherwise, if you don't have proper records or books, then it will be challenging to handle that at those point of time. Now moving on, I will discuss, what are the common mistakes what small businesses make. So this is kind of a checklist as to what we need to avoid in our businesses. The first mistake what they do, small traders in the Bangalore, is registering too late. So once show cause notice issued, then you start registering it. So you lose input tax credit, and also the government will ask for penalties and all for the turnover you have made. So the first mistake is registering too late, because not becoming aware. So whose responsibility it is to make aware is our own responsibility. Yeah. If you don't have knowledge, please take professional help, but do register on time. Then wrong choices between regular and composition scheme. So due to lack of knowledge, what is composition scheme and what is regular scheme, they choose regular scheme. So regular scheme has a lot of compliances, like we need to file monthly returns. Yeah, and the tax rate is for services, it is 18%, and most of the products are also charged at 18%. But in composition scheme, the GST rate is only 1%. Yeah. So many small business owner make this mistake of not choosing composition scheme and choosing regular scheme, and vice versa also. Yeah. So composition scheme, which scheme to choose, there is a detailed slide on that, which we'll discuss later. Then missing return deadlines, like GSTR 1 needs to be filed on 11th of the succeeding month, and GSTR 3B has to be filed on 20th of the succeeding month. So many business owners miss those deadline due to maybe cash flow issues or maybe lack of knowledge. Yeah. Then the other mistakes the small business owner makes is claiming ineligible ITC. So ineligible ITC is like taking GST input tax credit on, say, for example, if you're constructing a building, so you cannot claim input tax credit on cement and steel purchased. Yeah. So many business owners make mistake of claiming input tax credit on that also. Then if they have bought motor car, so that input tax credit is not available. So those input tax credit is also taken. So this will, if you have taken this, the department can easily identify that you have claimed ineligible ITC through the HSN codes, and they will issue show cause notice, and we will have to reply it. So we should avoid taking ineligible ITC. Then is missing claiming eligible ITC. So many MSME business owner don't know that we can also take input tax credit on fixed assets, like if you have purchased laptop, if you have purchased plant and machinery, right? So even on bank charges, the bank charges GST, those input tax credit you can take. Yeah. So many business owner are not aware that on what ITC I can take apart from purchase of goods. Those ITC also they miss to claim it. Then many business owner, they don't reconcile the books with GSTR 2A and 2B. So what is 2A and 2B? It's a little technical term, but I'll try to explain in a simpler manner. So whatever our suppliers from whom we purchase the goods, they file the GST returns. That gets updated in GSTR 2A and also GSTR 2B. The difference between GSTR 2B and 2A is only the invoices which are updated till 14th of this month will only get updated in that particular month. So if a supplier is filing his GSTR 1 after 14, then it gets updated in GSTR 2B of the next month, not the current month. But GSTR 2A gets updated on a dynamic basis. So GSTR 2A is dynamic, but GSTR 2B is static return. So the business owner need to reconcile it on a periodical basis. So what are the other mistakes? So the other mistakes what I find business owners make is while making movement of goods, they don't have proper documents, like waybill is missing sometimes, the tax invoice is not proper. Yeah. So this leads to 100% penalty and tax payment by the officer once he catch hold of the vehicle. He may charge penalty of 100% and ask you to pay the GST, which you can't take again the input for that. So it is a double whammy for a business owner. Then the other mistake is the MSME business owner are not aware that they have to pay their suppliers within 180 days. So what happens if you don't pay suppliers in 180 days is that you will have to reverse the input tax credit, whatever you have claimed. So the GST law requires that you pay a supplier within 180 days. So if you don't pay them, then you will have to reverse the input tax credit. Then moving on, not paying GST on RCM transactions. So as I discussed little earlier, that reverse charge, there are transactions where the receiver of the services and goods, the GST has to be discharged. So believe me that this is the major lapse which business owner makes. Whenever GST officer comes for audit or issues a show cause notice and asks to produce the books of accounts, many business owner has not paid GST on these RCM transactions. And this can be a big litigation between the department and the business owner. So one of my client, the RCM which was paid was supposed to be paid, it was 1,032 rupees. But the department went on to levy penalty of 20,000 rupees. So imagine the kind of hardship this business owner is going through. So once the GST returns is filed, the business owner or the accountant does not match the turnover. There is no reporting mechanism available with the business owner to check whether the GST returns have been filed correctly and the turnover, whatever is reported in GST and is matching with the books. And finally, many small business owners struggle with maintenance of proper books of accounts, right? They don't have proper books, like they just maintain it on a sheet of paper, which create a lot of trouble for them in the future. Imagine a notice coming to you after 4 years. So if you don't have proper books of accounts, it is very difficult to reply to those show cause notice, because department can issue show cause notice for 4 years, 6 years as the, if it is fraud, then it can go up to 6 years. Yeah. And also they don't get GST health checkup done for their business. Like how we do health checkup for our own body, we also need to do the GST health checkup done. See, income tax is only one time. We pay the income tax once in a year. But imagine if you are charging wrong GST rates, or you're not paying GST on RCM transaction, or if you are taken wrong input tax credit. Yeah. So these impacts is going to be massive on the business, because if department finds out, then they will definitely charge you to pay tax, interest, and penalties. Yeah. So this is going to be a big surprise to a business. So it is very important to get GST health checkup done for your business. Okay. So question to you guys. So which tax system did GST replace in India? Yes. Thank you, Arjun. Thank you, Rishi. Thank you, Jose, MJ, Afzal. Thank you. Yes. VAT is one of them. Then VAT, CST, central exercise. Yeah. So these are the taxes which it has subsumed GST. VAT, CST, central excise. Yeah. So it used to be earlier. These are all subsumed now. Even octroi also, like Mumbai, they used to have octroi and all. So those are also not there. It is subsumed in the GST. So thank you for answering this. Moving on. So some practical tips to the business owner is, first thing, check if voluntary registrations benefits to you. So I will tell you my own example is when I'm setting up this practice. Yeah, it was in the month of February, and I am purchasing machinery, laptops and all. So even my turnover was not exceeding the threshold limit of 20 lakhs. I went for a voluntary registration to claim the input tax credit. So we have to check whether voluntary registration benefits me or not. Then maintain proper books of accounts. Okay, it might be through outsourced or in-house accountant or accounting software, or maybe books, normal manual books. But nowadays nobody uses the books, but it is always beneficial to use an accounting software like Zoho, Tally. Yeah. So it is one has to use this accounting software and maintain proper books of accounts. Then match GSTR 2A and 2B with your books regularly. Yeah, if you don't match this, then you don't know which of your supplier is filing GST return on time and which is not filing on time. Yeah, so you need to regularly match this. So just to and make you understand you again, is GSTR 2A is supplier data. So whatever supplier files his return, GSTR returns from his sales, gets automatically populated in GSTR 2A. So GSTR 2A is a dynamic return data, and 2B is static data. So suppose in the month of, so this is let's say this is July month. So and if the supplier files his GSTR 1 data till 14th, that will get updated in our GSTR 2B. But if he files after 14th, then it will only get updated in 2A, and it will be updated in 2B of the next month. Important thing is we need to pay GST on the reverse charge transactions. Yeah. So many of the business owners fail to pay GST on the freight charges. So we need to be very cautious that we are paying GST on those transactions which we have received. Then please take professional help if required. So if you are feeling overwhelmed or if you are if you think your business needs direction, please take professional help. Any chartered accountant will be happy to help you, provided you approach them. So so how is the GST journey for a business? So first, check eligibility. Means if your turnover is exceeding 40 lakhs, then you have to take GST registration. Then you'll have to apply it online. I already discussed, which is Aadhaar and PAN based. Then you'll have to start invoicing and filing the GST returns, followed by filing GST returns and claim ITC. And you'll have to stay compliant to avoid penalties. For MSME business owner, these are the 5 steps you need to be aware of and do it on a consistent basis. So fourth question for you guys. How many types of GST are there in India? Can you observe? Thank you for answering. What are those? May I know? Perfect. Yeah. Perfect. Thank you, Aparna, for answering. Yeah. It's a CGST, SGST, IGST, UTSGST. I mean, Union Territory is also a GST, which is separately charged. So S is replaced by UT in case of Union Territories. So perfect, Aparna. And Rishi also answered correctly. And yeah. So thank you for interaction. Moving on. So I'm just approaching the last presentation, and I just want to make you understand when to choose a regular scheme and when to choose the composition scheme. So regular scheme is basically you will pay GST on the applicable rates, right? The tax rates are normal, which are 5%, 12%, 18%, and 28%. But in case of composition scheme, the GST rate is only 1% in case of goods and 6% in case of services. Yeah. So in first eligibility, so regular scheme is available for all businesses. However, composition scheme is available only if your turnover is less than 1.5 crore. Then tax rate, I already discussed this. It is normal GST rates, which is 5%, 12%, 18%. And here it is fixed lower rates, which is 1% for goods and 6% for services. Input tax credit. So in regular scheme, input tax credit is available. And in composition scheme, no ITC. You will have to pay on the turnover 1% fixed. You cannot claim it. You cannot claim any ITC on that. Then tax invoice. So on the top, you can just write tax invoice and show GST separately in case of regular GST scheme. However, in case of composition scheme, the nomenclature changed to a bill of supply in case of instead of tax invoice, and you cannot charge GST separately there. Moving on, compliances, you will have to file monthly GSTR 1 and 3B returns, and there might be annual return also, GSTR 9 and 9C you will have to file. Composition scheme, the returns are very simple. It has to be filed quarterly, which is in the form CMP 08, and one annual return. So total 5 returns we will have to file in the composition scheme, whereas it might be about 12 to 14 returns in case of regular GST. Then tax payment. In regular scheme, you just need to pay GST after taking the input tax credit. Then in case of composition scheme, you will have to pay GST at fixed percentage with no ITC benefits. Moving on, interstate transactions. So in regular scheme, you are allowed to do both sale and purchases. So you can sell interstate and also purchase interstate, but that is not allowed in composition scheme. Only purchases are allowed interstate, but you are not supposed to sell interstate. As I already told you that if you are selling from Kerala to Karnataka, it is not available in composition scheme. However, you can make purchases from Karnataka to Kerala. E-commerce sale. So if you are under regular GST scheme, you can do e-commerce maybe through Amazon and Flipkart. However, you are not, if you are composition scheme, you cannot sell through e-commerce operators. Then tax burden. Here in regular GST scheme, the tax burden is reduced because you take ITC. Here in composition scheme, the cost goes up. So I told you a machinery example. So if you're buying a machinery for 1,18,000 GST, the cost under regular GST scheme is only 1 lakh because 18,000 input tax credit is available. But under composition scheme, the cost becomes 1,18,000. Then regular GST scheme is beneficial for business owners who are having higher turnovers and who are making B2B supplies, and manufacturers and service provider who want input tax credit. And composition scheme, it is beneficial to MSME business owners and the business owner who are only dealing with B2C customers. So this is about the regular and composition scheme comparison. So question 5 to you guys. What is the maximum rate of GST in India? Right. Perfect. Thank you, Jose. Thank you, Afzal. Thank you, Arjun. Yeah. So 28% is the maximum GST rate in India. Of course, there is a cess also is there, but that doesn't come under GST. It is a separate tax. I just want you to check. Suppose if you are just starting the business or your startup, so I want you to check whether you have crossed the GST limit or not. So believe me, department has got a lot of information. All this UPI transactions, whatever you receive in your current account and all or savings account, they have all this information. And if your turnover is increasing, then you can expect notice maybe after a year or two. You never know it. Then if you want to do e-commerce sales, please, or if you're doing B2B business, please get registered for your business under GST. Then you'll also have to check whether you are losing money by not claiming ITC. As I told you that even my businesses, when I'm starting a CA firm, I did not have GST turnover that point of time, but I still went ahead and taken the GST registration because I wanted to claim the input tax credit. then you'll also have to check if you are under a regular scheme, is composition better for you, right? Because composition scheme has very lower compliances. You just need to file 5 returns, 4-month quarterly and 1 annual return, and just you will have to pay only 1% of GST. So we discussed about that GST is just not a compliance burden, but it's also growth enabler, that businesses would like to do business with you only if you are GST registered. You will also get loan only if you are GST registered, right? So it's not just a compliance, it's also a growth enabler. So also choose which scheme is better for you, or composition scheme is better for you, or regular scheme. So it's very important to stay compliant, because many that MSME business owner, I gave you an example from Karnataka, they got huge notices, and it's very difficult to defend them once the department have information. So yeah, that's it from me, guys. Any questions? I'm open to any questions.
Morning, sir. You have taken it very in a nutshell and a simplified manner. Thank you for that. One key takeaway that I have is GST health checkup that you have mentioned. Can you just throw some light on that, sir? What all we can, as a business person, somebody can get checked regarding this health checkup in GST?
Yeah, so yeah, very good question actually. See, many business owners, these RCM transactions. So many business owners fail to pay GST on these RCM transactions. Say, be it freight charges. Yeah, most of them buy goods, right? So they pay freight charges. Yeah, many business owners fail to pay GST on that, and they are heavily dependent on the accountant. And accountant, if he is not updated with the recent provision, he may skip it. So those for RCM transactions, yeah, and payment within 180 days, yeah, because if the department is going to issue a show cause notice, they will identify only those areas which they think that tax can be missed here. So they will point out to you, and they will ask you to pay with the interest and penalties at that point of time. So these are the so one point to just add is there should be, like, banks have maker and checker. Like if you remember, Sitesh, that banks had maker and checker. So maker, if you are totally dependent on maker, and if there is nobody checking, then he'll definitely make mistake and it goes unattended. And once you find it after 4 years, then imagine the interest and penalties you will have to pay. Yeah. So GST health checkup is required on a yearly basis. Maybe for any MSME business, it has to be done. I hope I have answered your question.
Yes, sir. Thank you so much.
Hi, is there any another questions?
Sir, I have a question. Sir had said two example while starting this class regarding that Panipuris and Panipuri cases. Is
Yeah.
any remedies for if such cases raise, any remedy for recover from this notice?
It is Rishi, right?
Yes.
Yeah. Remedy, yeah, see, only thing is, see, we need to pay the taxes. So it becomes difficult to prove, difficult. What we can do at this point of time is, you can't take input tax credit. Suppose if you're not registered, yeah, and the department finds out, then you can't claim input tax credit on whatever you have paid. The only remedy is we need to talk to that officer and seek help, and maybe uh, ask help in penalties, because penalty, they can levy penalty up to 100%, and we can just tell them, request them that it was not intentional and please levy us low penalty. So there is little remedy available, but not much once we skip that.
Oh, okay. Thank you, sir.
Nothing, sir. Actually, it was a wonderful class, nice experience. We got several points that we actually doesn't know about that one. Thank you so much. Much appreciated your efforts, sir. Thank you.
Thank you so much, sir. I hope with this knowledge, you will be able to do, you will be reviewing your accounts in a different perspective. Yeah. I hope you answer better question to your accountant with this knowledge. Yeah, that's what my intention was for today's class. So thank you so much for joining. It was great to speak in front of you guys. Thank you so much.
Thank you, sir. And if anybody has any kind of feedback or suggestion, please come forward and share your feedbacks. We are very happy to hear your feedbacks. Anyone?
Yes, thank you,
Any-
Chairman. Sir, as I said, you have taken a complex topic and tried to simplify it in as easy manner as possible. So thank you for accepting our invite. We are really privileged to have you as a speaker. I am sure that it must have helped a lot of business people and also early learners to get a touch on GST. Thank you so much, sir.
Thank you so much.
Thank you, CJ sir, for your valuable feedback. Anyone else? Anyone?
Thank you, sir. This was a vast subject you had taken very shortly and understanding for us. And thank you for this.
Thank you, Rishi.
Thank you, Rishi. Now, I would like to warmly welcome Mr. Savit Valail to deliver the vote of thanks.
Good morning once again. On behalf of JCI Triprayar and the Skills Sprint 2025, I extend my heartfelt thanks to CA Jithendar Patel for delivering such a valuable session today. Your deep expertise in taxation and your ability to simplify GST complexities have made this session truly impactful for our audience. My sincere thanks to our President J.C. Krishna, the Secretary Treasurer Abhishek, Mr. Ankit, VP Training J.C. Sitesh, for their dedicated effort in making this session possible. A special thanks to our participants. Without your curiosity and active engagement, this initiative would not have success it's today. Your consistent presence in skill sprint sessions motive us to bring more diverse and useful topics each week. We also acknowledge behind the scene efforts, the technical team who make sure our session runs smoothly and reach far and wide. Let's continue this journey for learning, growing, and empowering one Sunday at a time. Thank you, everyone.
Thank you.
Thank you. Bye.
Thank you so much. Bye.